Raise your imaginary wine glasses, ladies and gentlemen, and let us give each other a toast. A toast to the informed, to the ones who saw the writing on the wall, and to the ones who are watching the great repricing happen in real time while the rest of the world is still asleep at the wheel. While most people were distracted by the holidays, opening presents and celebrating with their families, the global financial system was being dismantled brick by brick. On December 26, 2025, the U.S. dollar received a brutal and historical vote of no confidence from the rest of the planet. We are no longer talking about theoretical decoupling or the gradual slide of the greenback. We are witnessing a violent, kinetic, and financial divorce played out across multiple theaters of operation. This is the polycrisis we warned you about, a convergence of debt, war, and supply chain fragility that is signaling the transition to a volatile new world order. The headline that should be screaming from every news outlet, if they weren't so busy trying to keep you calm, is that gold has shattered the $4,500 psychological ceiling, hitting an intraday high of $4,562.70. This isn't just a rally. It is a 72% year-to-date gain, the strongest annual performance for the yellow metal since the hyperinflationary crisis of 1979. Simultaneously, silver has gone completely parabolic, breaking through $75 per ounce to trade at $75.14, a staggering 158% gain for the year. This is not a function of simple inflation expectations. This is the market pricing in the total solvency risk of the fiat system itself. It is a classic illiquid breakout, where scarce physical supply is meeting panicked institutional demand. The big players are no longer trading paper futures. They are scrambling for physical bullion because they realize the counterparty risk of Western fiat is becoming unbearable. Why is this happening now? Because the dollar sphere, which relies on kinetic enforcement and financial dominance, is officially colliding with the emerging gold and commodity sphere, led by the BRICS alliance. The engine driving this monetary insurrection is no longer a secret. It is the coordination of Russia and China to build a lifeboat before the Titanic sinks. In November 2025 alone, China purchased a record-shattering $961 million in gold from Russia. This is the largest bilateral gold deal in history. They aren't using dollars to settle these trades anymore. They are using the ultimate clearing asset to bypass the U.S. Treasury and the SWIFT system entirely. They are remonetizing gold, returning it to its historical role as the anchor of the global economy. And it doesn't stop with gold bars. The BRICS alliance is moving forward with its unit currency proposal, a wholesale settlement instrument backed 40% by physical gold. While the Western media calls it a pipe dream, the unit moved into a pilot phase in late 2025. This is a direct spear into the heart of the petrodollar system. They are building a parallel financial architecture where the U.S. Treasury has no jurisdiction, no ability to freeze assets, and no power to dictate terms. The Eurasian power bloc is stripping the United States of its exorbitant privilege, and they are doing it with math and metal. But let's look under the hood of the American economy for a moment. Don't be bamboozled by the surface-level GDP numbers claiming a 4.3% growth rate. As many of you know, this is a phony growth driven by the charity of global creditors. The U.S. is currently running a $1.88 trillion deficit, nearly 6% of the entire economy. Without this borrowed money, the U.S. would be in an instant deep recession. And the cost of this charity is becoming astronomical. The interest payments on the debt alone have reached an insane $1.2 trillion annually, or 4% of total U.S. GDP. By 2035, this is projected to hit $2.5 trillion. We have reached the point where the government is just shuffling chairs on the Titanic, borrowing from tomorrow to pay for the interest on what they borrowed yesterday. This brings us to the plumbing of the system, the repo market. This is the cardiovascular system of global finance, and right now it is showing signs of a severe seizure reminiscent of 2019. On December 26th, the Secured Overnight Financing Rate, or SOFR, spiked to a spread of 28 basis points. In the world of short-term funding, this is a code red alarm. It means banks are hoarding cash and refusing to lend to one another, or the system is so choked with Treasury collateral that the market cannot absorb it. The Fed officially ended quantitative tightening on December 1st, but the damage is done. The ample reserves framework is failing. When the plumbing breaks, the Fed has only one choice. They have to print. They're already quietly buying $40 billion in T-bills every month just to keep the system from freezing up. This is quantitative easing by another name, and the market knows it. This is why gold and silver are flying to the stratosphere. Investors realize that the tsunami of cash is coming, and there's no way for the administration to rebuild supply chains, fight an AI war, and reshore factories without spending trillions more. Even Jamie Dimon, the CEO of JP Morgan, is sounding the alarm. He has warned of a risk of an American stock market crash that is significantly higher than anyone wants to admit. We are now entering what we call the diamond window, a 6 to 24-month period of extreme vulnerability where the everything bubble could pop. Diamond is far more worried than others because he sees the interbank trust mechanisms fraying. If the repo rates stay high, leveraged hedge funds will blow up, and that could trigger a cascading sell-off that makes 2008 look like a walk in the park. While the financial markets are signaling a loss of faith, the U.S. military is asserting its dominance through kinetic means to try and hold the line. The Trump administration has escalated its campaign in the Western Hemisphere to a level we haven't seen since the Cuban Missile Crisis. A total and complete blockade of Venezuelan oil tankers has been ordered. They are calling it a quarantine, a legal term used to avoid the fact that a blockade is an act of war under international law. The USS Gerald R. Ford Carrier Strike Group is currently in the Caribbean, projecting power and intercepting vessels like the Skipper, which was seized for carrying Venezuelan oil. The goal is simple: economic strangulation. Washington wants to starve the Maduro regime of hard currency, which has already dropped by 30% this year. But this aggressive posture has triggered a massive backlash. Russia has labeled the blockade modern piracy, and China, the primary buyer of that oil, has denounced it as illegal aggression. We are one miscalculation away from a hot war in our own backyard. This blockade removes 900,000 barrels of oil per day from the global market, which is exactly why your gas prices are staying high and gold is rallying even further. But Venezuela isn't the only front. On Christmas Day, a second front opened in West Africa. The U.S. conducted direct air strikes in Sokoto State, Nigeria, targeting the ISIS-affiliated group Lakurawa. President Trump explicitly framed this as a defense of Christians, warning terrorists that there would be hell to pay for the slaughtering of innocent people. This is crusade rhetoric that is causing a diplomatic firestorm in a country that is roughly split between Muslims and Christians. The Nigerian government is in a bind. They need U.S. intelligence, but they cannot afford the religious radicalization this narrative might trigger. But look at the strategic subtext. Nigeria just joined the BRICS alliance as a partner member. They are drifting away from the Western sphere and toward the Sino-Russian influence. This airstrike is a show of force, a signal that the U.S. is not giving up its foothold in Africa, where Russian mercenaries have already replaced French and American forces in neighboring Niger and Mali. This is about oil, resources, and the scramble for the Sahel. Now, let's talk about the tech war. While the U.S. projects strength with carriers and airstrikes, it just showed a major sign of weakness in the technology sector. On December 24th, the administration announced it was delaying new tariffs on Chinese semiconductors until June 2027. Why the delay? Because China has a gun to the head of the U.S. defense industrial base. China has tightened export controls on the periodic table of geopolitics, specifically gallium, germanium, and antimony. These aren't just obscure elements. They are essential for high-performance chips, radar systems, and night vision goggles. Look at the F-35 fighter jet. It requires 920 pounds of rare earth elements per unit. If China turns off the tap today, it wouldn't just hurt Apple or Nvidia, it would ground the U.S. Air Force. The U.S. is racing to build alternative processing capacity in Australia and Canada, but that won't be ready until 2027. This tariff pause is a strategic surrender, a ceasefire born of absolute necessity. China just won this round of the tech war, and while we are on the subject of critical minerals, we have to talk about silver. Silver is no longer just a monetary metal. It is a strategic resource that the world is desperate to hoard. It has hit $75 an ounce, an all-time nominal high driven by what we call silicon nationalism. You cannot build a missile, a solar panel, or a semiconductor without silver. In November, the U.S. officially added silver to the critical minerals list because they realize they import more than they mine and their supply is at risk. But here is the kill switch. China is the gatekeeper. Starting in January 2026, Beijing is implementing a new licensing and quota framework on silver exports. They are telegraphing the punch. They intend to use their silver for their own massive solar and EV industries, leaving the G7 to fight for the scraps. The supply deficit is already at 11%, with demand hitting 1.15 billion ounces while mine production continues to drop. If you hold physical silver, you are the biggest winner of 2025, outperforming the S&P 8-1. This all leads back to the Federal Reserve. Trump is already making moves to plant his loyalists in the Fed to replace Jerome Powell when his term ends in May 2026. He wants a yes man who will keep interest rates low no matter what the inflation numbers say. He wants an eternal upward slope for the stock market, but that means sacrificing the dollar. This is voodoo economics, and it's going to lead to a massive melt-up in gold and silver as the currency is debased to keep the everything bubble inflated just a little bit longer. The U.S. is on an unsustainable fiscal path. And the only way out is to print more money or cut spending, but spending can't drop if they want to reshore industry and win a tech war against China. It's a binary choice, and they've already chosen the printing press. 2026 is going to be a desperate year for the Treasury, with $8 trillion in debt needing to be refinanced. This is why they are shifting to short-term T-bills, which is the same as using a credit card to pay for your other credit cards. So, where does this leave you? The Great Fracture is no longer a prediction. It is our reality. The world is bifurcating into two spheres, the dollar sphere of debt and kinetic force, and the gold commodity sphere of hard assets and alternative rails. The timeline is accelerating. The events of this Christmas week are historical pivot points that will define the next decade. The sensationalist geopolitical economics niche isn't just for entertainment, it's a sit-rep for your survival. History doesn't repeat, but it is certainly rhyming with the darkest days of the 20th century. We are one miscalculation in the Caribbean, or one more repo spike away from a total system reset. Are you prepared for the age of hard assets? Are you buying the dips, or are you waiting for the banks to freeze? The unit is the final nail in the dollar's coffin, and the axis of gold is already operational. Don't wait for the mainstream media to tell you it's over, because by then, the price of entry will be far beyond your reach. Let me know in the comments below. Are you holding physical bullion, or are you still betting on the paper standard? Do you think the 2027 tariff delay is a sign of surrender? And what's your target for gold in 2026? Is $5,000 just the beginning? Smash that like button for the algorithm, subscribe to the channel, and join the community of the informed. We are navigating through crazy times, but as long as you keep watching the plumbing in the periodic table, you won't be caught off guard. Stay safe, keep stacking, and I'll see you in the next sit-rep. If you're not already subscribed to Markets in Context, now is the time. I'm Kevin Huang, and this channel is dedicated to cutting through the noise and showing you what's really happening beneath the headlines. This isn't mainstream analysis. This is the unfiltered sit-rep. You need to protect your wealth and stay ahead of the curve. Subscribe now and turn on notifications so you don't miss a single update as we navigate the greatest monetary transition in modern history. $5,000 gold is coming, boys. It's coming. Merry Christmas to the winners and prepare for a wild 2026. We are witnessing the death of an empire and the birth of a new monetary order. The U.S. is trying to maintain its hegemony through kinetic force, the blockades in Venezuela, and the airstrikes in Nigeria. But it is encountering hard physical limits. The gold commodity sphere is stripping the U.S. of its privilege, and they are doing it by building the future while we are still trying to save the past. The interconnectedness of these events is the key. The blockade pushes oil up, which pushes inflation up, which breaks the bond market, which breaks the repo market, which forces the Fed to print. It is a cycle that cannot be stopped. The alpha lies in understanding this vertical integration. Each event, the gold breakout, the Venezuela quarantine, the Nigeria strikes, the tech truce, and the repo seizure, is a standalone crisis. But together, they are the roadmap to the Great Reset. The roadmap for the upcoming week of content is clear. Stay focused on the hard assets. Empower yourself with analysis that validates your hedging strategies. Because in a world of make-believe digits and paper promises, only the physical remains. Sign off. The age of paper money is ending. The age of hard assets has begun. Are you prepared? Let me know in the comments. This is your definitive sit-rep on the collapse of the dollar reign.